It appears the recent pullback has ended, and we think the S&P could hit 1900 or above before we top out sometime early this year. Hi, this is Mark Arbiter with S&P's Chart Room. Taking a look at a daily chart of the S&P 500. Yesterday we dropped right back down to the 13-day exponential moving average. And this morning we bounced. That's a good sign. Many times during uptrends or the beginnings of new trends, uptrends, we'll come back and test that 13-day EMA and bounce. We also saw a couple interesting things yesterday. We had some bullish momentum divergences on the intraday charts. If you looked at the 30-minute or the 60-minute, we had some nice divergences at the low yesterday. And we also saw a nice reversal in some of the leaders. They were getting hit pretty hard yesterday, and many of them reversed at support. So we think the worst is over here for the pullback. We had thought that we might retest this breakout area, but the market's so strong it didn't even pull back to that point. We don't see a topping formation here, and we're going to look at the weekly chart in a second. What we're looking for with respect to seeking out a top here is some kind of head and shoulders top or a double top, and also in conjunction with an increase in price volatility. If we look back here to the spring and summer months, we did see a lot of volatility to the downside and upside for a couple months here. Fortunately, the market basically put in higher highs and higher lows during that period, but that's the kind of action we're looking for. If this top here had been lower, there was a possibility that we were putting in a head and shoulders top here. This would have had to come back down to here, so we would have drawn a flat neckline down here, but it resolved to the upside very bullishly. And then since that time, since the low in October, the market's been pretty calm. We will note that, we did have a pretty sharp pullback here. This pullback was lighter. This pullback was lighter. And then the last pullback in here was really short. And then the one we just had, only lasted a couple days. You can hardly see it on the chart. So we think with each pullback getting shallower, we could see a blow-off move as we move further into the year. Moving to a weekly chart, another thing we're going to look for here for a top or a major top here in the market is some type of bearish divergence from a weekly perspective. This is a weekly chart of the S&P going back to the bear market bottom in 2009. On the top here we have the 43-week RSI. Just posted another new high and has been in this uptrend since about the middle of 2011, which is a good sign. Higher highs and higher lows for momentum is a bullish sign. What we want to see here for a top is some kind of pause in momentum and a peak and higher prices as we start to put in lower highs with respect to momentum. As you can see, back in early 2011 to mid-2011, we put in this lower high, and we put in another lower high as prices peaked during the last top. If you look back to most major highs, you could probably see this. Look back to the 2007 high. You also had major divergences with respect to weekly momentum. We hit one of our targets recently, 1850. That was based on the size of this decline in 2011 and then a Fibonacci extension. We think this wave 3, based on the size of this wave 1, if this wave 3 is slightly larger than wave 1, it gives us a target up around the 1940 level. We have some other targets between 1900 and 2000. So we're on the lookout for a top here. We wrote 13 things to look for a top to emerge. Some of them are starting to be seen. Certainly sentiment is extremely stretched to the bullish side. We're starting to see some cracks in the leaders. We're also starting to see some fluff in some of the lower price stocks. But as far as the main price action and momentum, we still think that bodes well here for the early part of 2014. This has been Mark Arbiter with S&P's Chart Room.